Each week brings a different picture to New York trading, at least with dealers we speak with. This week's activity was much weaker than the past two, but this roller coaster ride really is what our new scene is described since November. Overall activity remains below historical trends for March. Bridal remains the strongest part of the business right now. This is also the case for Blue Nile, which provided a bit of under-the-covers look to their model and transactions at the Morgan Stanley Tech Conference. Company CEO Diane Irvine said their research found the average Blue Nile customer views almost 200 pages of diamonds and spends about 3 weeks researching before making that purchase. The average ticket across all jewelry categories and loose stones was about $2,000, but average bridal purchase was about $6,000. She said those who buy diamonds on BlueNile.com do so because they want to buy from an expert in diamonds, not from a department store salesperson who sells all types of jewelry. Nearly half of those who buy on Blue Nile do speak with a customer rep at some point during the transaction, which does give Blue Niles that opportunity to build trust with the customer. Blue Nile spends about 4% of their revenue on marketing programs, and that meant about $11 million based on revenue from last year of $295 million. Diane expects more brick-and-mortar bankruptcies within 90 days, which indirectly helps them tap potential new customers online, she said. Her prediction isn't good news for the storefront, but time will only tell if that really comes true. Let's see what is happening in Israel.
Hi, Jeff. There's not much in the way of good news from the Hong Kong show either, I'm afraid. So many here were optimistic, and there was an unprecedented number of participants from Israel, but in the end, sales at the show were lackluster. Traders were disappointed with the results. One diamantaire quipped that buyers came to the show with an axe. Sales reportedly came very slow and buyers demanded heavy discounts. The Hong Kong show made it very clear that even in the Far East, demand remains weak and it's very much a buyer's market. Average discounts hovered at 45% down from list, and most of the sales that took place came from goods in 1.5 carats and below, with very little action in 2 carats and above. This was not the momentum Ramat Gan was hoping for as we approached the Basel show, but in this tough economic environment, staying solvent and hanging on is what matters most. With that said, Jeff, back to you.
Okay, thanks, Zach. If you were in the market to buy loose stones, the U.S. Treasury will be auctioning diamonds in Manhattan on March 20th at the New Yorker Hotel. There are about 600 stones the government seized during a local money laundering investigation on 47th Street. Proceeds from the sale go to the Criminal Investigative Division of the IRS. Now, you can view descriptions of all the stones right now on the Treasury's website. They will allow inspection of the goods on March 18th and 19th. Goods offered include rounds mostly, but there are also many princess cuts available and some marquise. Rules to participate in this auction are available on their website. A minimum deposit of $5,000 will be required on all those purchases over that amount, and final payment must be made to them by March 24th. Shares in Citibank and B of A may have had a banner week, but jewelry stocks are having a very tough time. For the first time, Zale shares closed below $1 on March 6 and continue to close under $1 this Monday and Tuesday. At 99 cents each, Zale shares were down 96% from 1 year ago. Burks and Mayors slipped below $1 for the first time in October. Now, they have not since regained traction either. Shares in Burks are down 93% from 1 year ago. Signet shares, meanwhile, are down 68%. Tiffany is down 51%, and Blue Nile is down 47% from a year ago. Gold has taken a hit this week as investors turn back to Wall Street, optimistically hoping stocks have bottomed out. Now, they've been selling gold. They've been snapping up cheap dollar stocks. That was especially true for banking shares like Citi, which is up 74% just since Friday. With all the investment attention on Wall Street, where does gold go from here? Well, UBS thinks that given the greenback printing presses are running overtime between now and year 2015, gold could hit somewhere in line of $2,500 an ounce, especially if inflation comes back into the picture. UBS cited other factors could drive gold even higher, especially if world markets redefine gold standard currency. For all the latest news, please visit diamonds.net.